Hello students, welcome back to Rankers Hub. I hope you're all doing well. So today let us understand the concept of what is a bank first of all. Then you will understand the evolution of banking structure in our country called India. So if somebody asks you to define what is a bank, so try to understand one thing. A bank is a simple financial institution which do accept the deposits and which give away the loans. Clear? The bank is a simple financial institution which accept the deposits and gives away the loans. Clear? So the bank is also an institution which completely runs on a concept of interest. That is, with the interest, the banks do function, which we can conclude as a simple logic to define a bank. Let us understand this with a very small example and let us come to a pact. See, assume that there are four friends, 1, 2, 3, and 4. Clear? And let us suppose that all of the four friends are trying to have a chocolate. Clear? Trying to have a chocolate costing 10 rupees. And every friend have 10, 10, 10, and 10. But assume that there is only one chocolate in the market. Now, the same one chocolate cannot be given to four different people. But these four of them are having something like 10 rupees. So, when they are not getting 10 rupees of chocolate, now there is a person sitting here. He is known as a mediator who says, instead of keeping your 10 rupees idle, why don't you give it to me? And if you give your 10 rupees to me, while you return, I am going to pay you 10% of interest. So this is what was promised by this mediator person sitting in the between. So he has taken 10 from him, 10 from him, 10 from him, and 10 from him, and have collected rupees 40. And there is a person sitting here known as a Cadbury company. And this Cadbury company is in the requirement of rupees 40 loan in order to make a chocolate. So what this person says is, okay, when you are in need of a loan of rupees 40, I am going to give you rupees 40 loan, but while you are returning back, you need to pay me 20% of interest. So 20% interest is expected while he is returning. So after the Cadbury have manufactured the chocolates, they have produced the chocolates, then they have made in the market. And while returning the money, the Cadbury chocolate to this mediator person have paid 20% interest, that is rupees 8. So in totality, he got rupees 48. Now the same mediator person with this 48 rupees available, he will have to return everyone's 10 rupees first, 10, 10, 10 and 10, and 40 rupees is gone there. And he have promised how much? 10% interest. So 1 rupee, 1 rupee, 1 rupee and 1 rupee. So in totality, he is getting 44 rupees to be paid to the four different persons. Now the person who is sitting in between, without doing any job, he earned rupees 4. And this is a profit to the mediate person. And don't you think so? The mediate person, whoever is sitting here, is known as a bank. So the bank is a financial institution which do accept deposits and which gives away the loans. In this way, we can conclude the definition of a bank. So if you understand the history of the bank, clear, in India, the banks are all started during the period of Vedas. Clear, do remember, in Vedic period, the banking structure have started in our country. And during Vedas, the loans were also issued. The loans were called by a different name known as Ranapatra or Ranalekya. The Ranapatra or Ranalekya is a name of a loan given during the Vedas altogether. And at the same time, do remember one thing, interests were differing from person to person on the basis of their caste. Clear? You remember caste, no? That is the caste discrimination which we got during the Vedas period only. During Vedas, there is a philosophy which says that if suppose, assume that this is God, those of coming from the head of the God were known as Brahmins. Those who are coming from the shoulders of the god were called Kshatriyas. Those who are coming from thighs of the god were known as Vaishyas. And those who are coming from the feet of the god are called Shudras. And Shudras in our country are of two types. One is Dalit and the other is Adivasi. And the same Dalit in the contemporary times is known as scheduled caste, and the same Adivasi in the present times is known as scheduled tribes. So the loan percentage, the interest rates were different according to the Varna system. This is Varna system. So Brahmins used to pay 24%, Kshatriyas 36%, Vaishyas 48%, and Shudras 60%. Do remember, this can be a direct question. Then in the British era, there are three presidency banks that are started in our country, known as the Presidency Bank of Bengal, Presidency Bank of Bombay, and Presidency Bank of Madras. These three are the prevalent banks in our country. And at the same time, try to understand, in the year 1770, the first bank called Hindustan Bank was established at Calcutta. Clear? In India, the first bank that is established is known as what? Hindustan Bank. Kaha aata hai? In Calcutta. In 1786, General Bank of India was established. In 1865, Allahabad Bank was established at Calcutta. It is the oldest and still continuing bank of India. That is, still prevalent bank, that is Allahabad Bank. That is the reason Allahabad is known as the oldest and at the same time still continuity bank of our country called India. In 1770, the Bank of Hindustan Bank was established. Then in the year 1895, Lala Lajpat Rai founded Punjab National Bank. To remember, Allahabad Bank, established in 1865, is also established by the Britishers. But the first bank in India that is established by an Indian is known as Punjab National Bank, that got established in the year 1895. But before that, Audh Commercial Bank was established at Faizabad in the state of Uttar Pradesh. Clear? Audh, clear? It is also known as Awadh Commercial Bank, which is also prevalent right now. Next, see some other definition we can take here. The word bank is taken from Greek word called banko, meaning is heap of the money. Heap of the money meaning thereby store of the money. Shet, Shat, Shrofa, Chetiyar are known as bankers during the Vedic period. Clear? There are different types of bankers. We don't have any SBI, GFC access during that time now. So these are the various types of names that are prevalent during that time. The evidence of banking can also be seen in medieval ages, where the loans are known as dastavez. Very important. During the medieval Indian history, especially during the Delhi Sultanate, the loans were known as dastavez. Next. Just now I have said three presidency banks were established in our country. One is the Presidency Bank of Bengal, formed on 2nd June 1806. Presidency Bank of Bombay, formed on 15th April 1840. Presidency Bank of Madras, set up on July 1st, 1843. And three presidency banks were in the year 1921. All the three presidency banks were merged into a new bank known as Imperial Bank of India. Clear? And the same Imperial Bank of India in the year 1955 came to be known as State Bank of India. Clear? Try to understand. Presidency banks Bombay, Bengal and Madras, three of them together were created in 1921, merged as Imperial Bank of India, and the same Imperial Bank of India is renamed as State Bank of India. Clear? So this is something about the historical evidences of the banking in our country. And let us also understand RBI in a great detail, the structure of RBI in the further videos. So for more such updates, for more such videos, please do subscribe to our channel Rankers Hub today itself, and do watch all our videos. Keep liking, keep sharing, keep watching Rankers Hub. Thank you so much.